Welcome to our session on the IRS Form 1040. We're also going to talk about its attachments, which are very important for almost all taxpayers. First, I might note that the form is used by most individual taxpayers. If you earn under $100,000, either single or as a family, and you have very few deductions or none, you may qualify for the 1040EZ or the 1040A. However, I would suspect that people who come to see a financial planner are well above those thresholds, and will fall into the 65 to 70% who wind up using 1040. I might note payments are due by April 15th of the year following the tax. At the same time, I would say that most people are unaware of the fact that the form itself is not really due until October. So you wind up many times paying taxes well before filling out the form, and the question many times is why? And it's because many times the taxpayer does not get all of the documentation needed on time for April 15th, because they either have a trust income coming in, a partnership coming in, maybe some other sources which are delayed getting their inputs to you. So we have to guess at how much we're going to be paying in April 15th, because if we understate the April 15th, there's a penalty. And I would say in most of my clients' cases, we do wind up waiting until September, October to actually filling out the form. And I like to be in a position where my client gets money back, because when they get money back, they can say, Larry, I got good news, you're getting back $4,000. That always goes over well. However, if they have to pay, and I say in September, October, Larry, we have to pay $4,000 plus a penalty and interest, that doesn't go over very well, and I wind up losing a client. So I found that I always overestimate anything we would possibly need in April on the April payment, so that we aren't paying any penalties and losing clients. Forms should be prepared on a computer. It's no longer handwritten. Now I realize that if you're looking at forms that your parents did, they were handwritten, but today everything's done by computer. In fact, many people have said that the 1040 form itself is obsolete. All we need is a schedule for us to put down the data and enter that data in the computer, and there comes the tax form, which is true. For example, those of you who use TurboTax do that. And then remember also that today, if you're having your form prepared by a professional, it's being electronically submitted, so the form doesn't even go to the government. The form consists of 7 major parts, is the easiest way of thinking of it. They go from something straight administrative to your signatures. That's the beginning to end, so let's take a look at it. This, for those of you who have never seen a 1040 form, and I suspect there's probably some tax preparers in busy offices who never see it, because they are busy doing the tax work part and not the paperwork, and the paperwork's done usually by the clerk and then by who's ever going to sign it. But this is what the form looks like. Let's take a look at the administrative issues first. First of all, failure to include the correct Social Security number is a major occurrence. In fact, in my history of preparing taxes, that's the number one issue by far. People get their Social Security numbers number transposed, or they forget what the Social Security number is and give them the wrong one, or they did not get a Social Security number for a child and make up a number, all sorts of reasons. But Social Security numbers are a problem. Second, the wrong name. The person either got married or got divorced and changed their name, and that should be notifying the Social Security Administration. If you notify the Social Security Administration of your name change due to marriage, divorce, etc., they will get it to the IRS. If you got the wrong address, which happens all the time with clients, use Form 8822. It's a simple form. You send it to the IRS giving your new address. That makes sure you get the notices that you're supposed to. I've had clients who did not notify the government that they changed addresses, and 4 or 5 years later, they found that some lien was placed on property they used to own. They didn't know about it, and the poor person who owned the property at the time had a lien on it, and we had to do a lot of work to get it out of the lien. So I would suspect that it's a bigger problem than a lot of people think when you don't have your right address on. So each year I make my clients update their address. One thing I do also is I look at the last 2 tax forms they did to see if the address is the same, the social security numbers, the name, the dependents are the same. And then finally, failure to include the correct social security numbers of dependents. That's probably part of the issue regarding correct social security numbers, but I separate it because there are times people have children and forget about getting a social security number for them, or they adopt children and forgot the social security numbers that are needed. Okay, now income is the second part of the form. It's all sources of income that are required to be reported, and that's the key, required to be reported. Unless it's stated in the tax code, anytime there's income, you are to report it. And the exceptions to the codes include such things as life insurance proceeds, gifts, some work that's fringe benefit related. For example, at work, if they give you occasional lunch or occasional party or whatever, that is not taxable to you. But for the most part, most fringe benefits are taxable, as well as any income that. So what is income? Anytime you have a transaction with another person, it's income to you, and an expense to you is an easy way to think about it. So if I wash your car and you do my taxes, I have to. You have to pay me for washing the car. I have to pay you for doing the taxes, and the net amount would be actually taxable to us. So income is very broad. Another one that most people forget is unemployment insurance. That's also included. And if you're getting Social Security benefits, there's another one that people seem to miss. So income is very, very broad, much broader than people think. You win $250 in a contest, that is taxable. Most people don't realize it's jury duty pay. I think it's $5 a day in California. That's taxable income. The next area is adjusted gross income. Adjusted gross income can provide the greatest savings for taxpayers of higher income. And with my clients, I've always worked the hardest on trying to get tax planning in the area of adjustments, because it's so many opportunities to reduce the tax, much more than anything else you can do. And there's all sorts of it. There's no logic to what adjusted gross income. It's when the federal government decides it will be gross income. They generally fall into areas such as education related, health savings account, moving expenses, retirement, alimony, self-employment tax. An easy way to get the list is just go to the IRS form and look at blocks 20 to 37, and that'll show you all of the adjustments. Again, great place to work on for getting your clients' taxes reduced when we're talking about tax planning. The next section we have are deductions, exemptions, and tax credits. This is probably you and I can do the least on, although our clients think we're going to do a lot. And we're going to cover each of the itemized deductions in a few minutes, but let's look at the part of the tax form first. It covers the standard or itemized deductions. You take the higher of the two, and we'll talk about what those are in a few minutes. You take your exemptions. You allow for you, your spouse, if you're married, and also any dependents. And dependents are defined in the tax law. They're quite different than what you might expect. In fact, they're quite different than they were 10 years ago. For example, I might have someone who's from Mexico living in my house that qualifies to be a dependent today. It doesn't say anything about them being a citizen of the United States. It doesn't mention whether legal or not, but if they're a resident and they meet the requirements, they will qualify. I can have children in my house that are in their 20s and 30s who can qualify as dependents in certain cases, And if they have a boy girlfriend living with them in my house, they can qualify. So it's amazing how broad it is today. At the same time, there are restrictions, and the restrictions are mainly in the area of the income they earn cannot exceed the amount of would be under the exemptions, which we'll talk about in a minute. We have calculation of tax done here too, which is today done by the computer, and certain tax credits are listed. Again, that varies each year, so just be aware there are tax credits. Some people aren't aware of it and therefore don't take advantage of the tax credits. That's the important thing for you to go to tax preparer if you're not going to do your own taxes. And if you're going to be advising clients, also get into what tax credits they're eligible for. State tax credits are different than federal. For example, here in California, we have a lot more credits, and they can save a substantial amount of money by making use of the credits. The fifth section is other taxes. We have, first of all, have the self-employment tax. We have unreported Social Security and Medicare taxes, and that might be because you did some work and they didn't take the Medicare or Social Security tax out. There's any taxes on retirement plans, for example. You took the plan out early. And finally, household employee taxes when you have employees in your household. Again, we'll talk about more of that later. I keep saying more about it later because some of this does require a lot more detail than we're talking about at this stage. The sixth part is the payment, credit, refunds, and net amount owed. Again, this is kind of punched in numbers. The unique things are if there's the earned income tax credit, and if you're doing taxes for someone and there is an earned income tax credit, you have to have a special course taken with the IRS before you turn in the tax return. Otherwise, you're going to get penalized, and that's because there's so much problem areas in the area of earned income tax credit. We have our American Opportunity Tax Credit, another one that has varied over the years, and so you should check that out each year. The amount paid with your extension to file, and again, I have my clients get many cases having to extend, so this is the amount of money that we paid in at that extension, so that we have a money coming back to them in October rather than paying penalties in October. And we have any excess Social Security taxes handled here. For example, if you worked at 2 or 3 employers during the year and you went over the $107,000 or whatever, you're going to be getting money back. Any refunds from the federal government that are owed, and then the net amount owed. So it's a number, so it's a number crunching more than anything else. Again, you do have to check the earned income tax credit and the American Opportunity Tax Credit. I might note, since earned income tax credit only goes up to $50,000 of income, I would suspect that you're not going to have any clients with that. I don't know how they could afford to go to a financial planner with that kind of income, but you never know. I mean, I've had people come in and ask from saying they didn't have any money, but they needed help filling out their tax return, and I did it pro bono, and I think that probably happens quite often. Although today, under today's rules, I would have to take that course offered by the IRS first, so that I would be able to fill out the form with the earned income tax credit. Form 7 is, or Section 7 is the signatures of the taxpayers, your ordinary tax signatures. If you do tax returns in the past, I always make sure I look at the last 2. I mentioned earlier for the Social Security numbers and the addresses and names, but I also look for how they sign the signature, because if the signature is different, that can cause trouble with the IRS. It should look like it did in the past years. Your occupation, and that's something to be careful of. I've had people try to overinflate their occupation to make it look like they had a much better job than they did. It works against you, because the occupation many times determines whether or not you're going to get audited, because are you living in a style represented for your income? So let's say you're a medical doctor and you worked for a hospital and you declared an income of $30,000, that's not going to work. Now if you said you're a hospital worker and you said $30,000, that would work. So you have to be very careful on how the people do their occupations and compare with their income. There's no such thing as the one title you use for a person's job. There's multiple, figure out the best one. If the IRS provided protection PIN number for the taxpayer, include that. Otherwise, it's not going to get processed. And that's caused because there has been a lot of cases where people have used others' Social Security numbers and filed tax returns early in the tax year, got a refund before the person who had the real name and Social Security number submitted, and the person who submitted was told, hey, you already submitted. And that turns out to be a problem area. And finally, the pay preparer's name and organization. Again, if it's done for free pro bono, you don't fill this out. If you're getting paid, then you fill this part out for the pay preparer. So if you're just advising on the taxes or you're reviewing the tax form for the client and you're not involved with the preparation of it, then you will not have to put your name there.